Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Dhanuka Agri, a very interesting agrochemical company which is coming at attractive levels, albeit it has run up just recently. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Dhanuka Agritech, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and it will help you also ask me questions directly on a daily basis. The Patreon membership starts with $2 a month, but when you take a $10 membership per month, you can ask me queries on stocks and markets on everyday basis. Also, you have access to my portfolio and watch list and any articles that I publish on an exclusive basis on Patreon, any news feed, etc., which I do that on a regular basis before coming on YouTube. For detailed market or company talk or a number of stocks that you are having, you can directly email me and we can work something out. Now about Dhanuka Agritech. It was established in 1985 and it manufactures agri inputs comprising of crop protection, chemicals as well as plant growth materials. So some enzymes and you can say liquid products which helps in plant growth. Top brand in its segments and one of the market leaders, first or second in all the segments that they produce the products. Over 40 products with brand names in various domains for crop protection like herbicides, fungicides and pesticides that they produce. And with the kind of pandemic that we are facing, and also with the kind of locust attack that we have seen, the use of crop protection products and such kind of products would consistently increase at least for the next couple of years. A prominent national player is Dhanuka Agritech. If you look at the numbers, then the financials are very good at 27% sales growth that has come in the December quarter, and the profit has jumped by 92% to around 27.5 crores. It is virtually debt free. There is some debt, but very low debt that they have. Virtually, it is debt free. High institution and promoter holding, and only 9% free float is there. So only 9% of the stocks are with you can say retail investors. The other 91% is with the top players, either the management or FII and DIIs. The return on equity is on an average, it is fine at 17%. Operating profit margin at 15% is slightly lower than what I would like with such consumption stocks. If you look at the performance of the stock, then the stock went up around 2.5 times over the last 5 years. So it has been a consistent performer, growing consistently over a period of time. And we have seen the stock grow something like 25-26% year on year. Numbers have been consistently robust, so a good 20-25% profit growth we have seen, is on the verge of making new highs and is making new highs on a daily basis. So it just surged. When I made this presentation, it was around 500 rupees or 550, 570, round about there, and today the stock has blasted through, I think, 800 odd. It is already placed there, so it has broken into new highs. It did fall 40-45% from the highs of February, when the March fall in the market came in. And that is what I say, that whenever such fall come in, you have to pick the gems, you have to pick the best of the companies, and they will come back very quickly. And we've seen what happened with Dhanuka Agritech. High promoter and institutional holding is another very good indicator of the stock being extremely strong. Strong operating numbers, as we have just seen. And as with the other, you can say, crop production, bare crop sciences or crop production protection companies, or a or agri companies, Dhanuka Agritech also gives out very good dividend. So why I believe it is a buy on you can say major declines, or buy at current levels and also on declines. It is a market leader in its space. Some of its products are selling big time in the crop protection space and fungicide space. And very few companies provide fungicides. They do provide insecticides and other crop protection products, but fungicides are not very much seen in a lot of manner. And hence what I believe is over a period of time one can look at you can say buying into this company on major declines, not at current levels. So a number of top brands selling across India of theirs, and it is not placed in particular one part of you can say India, whether it's west or north. It is selling across the states and will perform as rural economy recovers. So there is demand for crop protection products, and there is pent up demand for the same, because many of the crops are failing at this point of time, with the kind of situation that we are going through, with no more labor at the places in at the farmers places, and labor coming back to their hometowns, etc. There's a lot of demand for protecting crop and for helping farmers in that regard. So even government it seems like government would come up with other measures in which these farmers will be able to buy crop protection products and other products in the same segment at a lesser rate, or at a subsidized rate. These companies might get some freebies, etc. So over the next 2 3 years, this sector could do decently well. I'm not very gung ho about it for the next 5 to 7 years, but next couple of years could be good. Next couple of seasons could be good for this segment. The recovery in tractors that we have seen with Escorts, and now M&M coming out with the rural, you can say, sales of their vehicles doing well. That also augurs well for some of these companies as well, which are into farming, which are into producing and selling products in the rural economy, more or less. Attractive valuations currently trading at 25 26 times earnings, not 35 38 times. 38 times on a standalone basis, but overall it is trading at 25 times or so. On an average, we are looking at a situation where it used to trade at 50 60 times. It is considerably lower, trading at lower valuations, and we could see certain up moves, but you need to buy on declines because the move has taken place pretty quickly in the stock. So if you look at the technicals of the company, then there is strong support between the 550 560 levels. So one has to look at something like levels closer to 550 to buy into, or at least 600. The 200 DMA is around 400 rupees level. The stock has fallen vertically post the economic you can say shutdown, and after that there has been a tremendous comeback of the share, and now it is trading at all-time highs. Wait for major declines to buy into such companies, and do not buy immediately. Probably with the China situation that we are facing at the moment, the market may fall. These stocks may correct a bit, and probably 15 20% lower would be better levels to get into the stock. The stock has run up a lot over the last 5 7 trading sessions, and that's why you need to be very wary about buying in at these prices. The long term stop loss can be put at 450, so it is way down there, something like it is down 40%. So the long term stop loss would be something like 40% below your price. So that's why it's better to buy around 600 650. If you get it, can give consistent returns over a long period of time. So buy on major declines is my strategy. Keep track of numbers. Have a good 7 year time frame, and buy when the stock falls. Whenever stock falls in a 3 4 month period of a cycle, it can give good 18 19% CAGR return, and have less than 5% exposure to such companies. So this was my video on Dhanuka Agri Tech. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.